the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu, counting you down to the closing bell. Here to help take us beyond the bell, a global simulcast with Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and those folks streaming us on YouTube. We haven't really had a day in quite a few weeks where I think the market can really cheer in a broad-based manner. They're getting that today, Carol, with all of the major indices up 1 to 2% on the day.
Yeah, really all in. And I'm looking at the major industry groups. I know we're going to get into them later, but everything is up and in some really, really strong gains in today's session. So this broad-based rally really a standout based upon like some of the trade that we've had over the last couple of weeks, Maddie.
Yeah, I love the way that our Scarlet Fu said it earlier, that it's just a pesto pizza of green on the screen. I think that's an MBA level comment, Scarlett.
Or spinach quiche, whichever you prefer.
Of course, yeah. Let's keep it a lot of options there. But it really is. It's interesting to see kind of a more bullish day.
Yeah, we're looking at the S&P, Dow, and NASDAQ all up at least 1.9%, with the S&P the laggard here, Romaine. The NASDAQ really the star performer following the Meta earnings, which kind of changed the way people were thinking. And as Tom Kennedy was just telling us, perhaps investors are testing out the idea that the worst of what we've seen with tech has passed us by.
Yeah, and I just want to point out, I was just kind of looking through some of the numbers here. I mean, if we close at these levels, and it looks like we are here, the S&P actually now erasing all of its losses for the month of April here with only one trading day left here in the month. If I remember correctly, right, Friday is tomorrow here. So this is a pretty significant move, not just in terms of the percentage move, but I think on a psychological level to see these types of moves. We're getting the closing and the clapping of the bells at the NYSE and the NASDAQ. And if my eyes don't deceive me, you squint really hard there at the NYSE. You see our very own Gina Martin Adams helping to ring the closing bell on the NYSE. Yes, this is part of the CMT Association, of course, Chartered Market Technicians here celebrating their 50th anniversary. Of course, this kind of started out as really just an informal gathering back in the 60s. They incorporated in 1973. And there you see Gina Martin Adams, one of the smartest people we have walking around the building here at Bloomberg World Headquarters, now down ringing the bell at the NYSE. And what a day for her to ring the bell. The Dow Jones Industrial Average higher by 1.6%. The S&P 500 having its best day since early January, up 1 point. We'll call it rounded up to 2%. The NASDAQ Composite up 2.5%. And the Russell 2000 going to close higher by 1.2%.
All right, so let's get to it, folks, as we await those results from Amazon. You had most names in the S&P 500, as we've been saying, broad-based. Scarlett, 444 names gaining ground today, 59 to the downside. So, yeah, investors all in.
Investors all in. And of course, you look at the sector performances on a 24 industry group basis, everything is green. Oh, look, Amazon numbers just came out. Romaine, let's take a look. We've got first quarter Amazon, EPS of 31 cents. Net sales also beating the consensus estimate, 127 versus the estimated 124.
Yeah, let's go through these numbers right now here. We talk about what looks to be a big interesting beat here, at least on that main number here. Let's go through some of the operating numbers, because on a margin basis, you did see widening in the margins, which is what a lot of people were hoping to see, 3.7% versus a street estimate of about 2.3% here. We talk about the actual guidance going forward here. For 2Q, they're looking at net sales of 127 to 133. The street was looking on average for about 130 billion. So it looks like on the top end, they're definitely going to come in above that. Operating income for the second quarter, though, the pretty wide range that they're giving, $2 billion to $5.5 billion. The street, on average, was looking for 4.7, so a wide range that I guess gives them a lot of wiggle room for a beat or a miss, but the top end of that higher than the average of analyst estimates here. It looks like the initial reaction here, guys, is to the upside. I'm going to dive a little bit deeper into these numbers. We got other earnings crossing the wire right now, including Intel.
Yeah, let's take a look at Intel's second quarter outlook, because it's all about what it sees going forward. And revenue, $11.5 billion to $12.5 billion. Analysts were looking for $11.75 billion. So certainly giving a top end of the range that does beat the consensus estimate. As for the quarter that ended, first quarter data center and AI revenue also coming in higher than anticipated. The stock gaining about 4.5% right now, but still, Intel did report a loss for the quarter. It's an adjusted loss of 4 cents per share, which is actually wider than the expected 2-cent loss per share that analysts had been looking for. The sharp decline in PC sales, also falling data center demand, and increased competition from other chip makers like AMD and ARM are the big drivers behind that sales drop in terms of the direction from a year ago and the loss for the quarter.
I want to go to T-Mobile earnings here, reporting postpaid net customers for the first quarter that did beat the average analyst estimate. Earnings per share coming in at $1.58 versus the estimate, which was $1.48, according to the Bloomberg consensus there. We've got revenue at over $19 billion here, coming in a little lower than estimates there. The total net customers were also a bit of a beat. We've got 1.32 million. The estimate was 1.2 million on that. And I'm just going to take a look at the stock price really quickly. Looks like it's going up a little bit here. Yeah, we've got up 1.37% on that news. Again, beating those EPS estimates.
Let's go back to the big one, Amazon, right? Because it's such a player on cloud, on advertising, also on the consumer. So Amazon beating on first quarter revenue. Shares are shooting up. We're showing these results. I'm looking at our Spencer Soper on our live blog that they can keep growing sales at a healthy pace. So on the top line, it's a beat across the board for Amazon. And I'm looking into the press release. They're talking about their advertising business because on a 3-year basis, this has really been the star performer in terms of growth. They're talking about their ad business continuing to deliver robust growth, largely due to an ongoing machine learning investments that help customers see relevant information. So we see that play in terms of data. AWS business navigating companies spending more cautiously in this macro environment. We continue to prioritize building long-term customer relationships. So some cautiousness, if you will, when it comes to cloud there.
Cautiousness here, but the growth was still there. We haven't actually gone through some of the actual numbers on an individual basis as far as we go through those individual businesses here. But that big drop-off that everybody was looking for in the cloud business, it really didn't materialize. I know some of those estimates had come down, so maybe the bar was a little bit lower, but you still had that 16% growth in AWS, $21 billion in revenue. You still had that 18% growth in the third-party seller service, $30 billion in revenue coming there for the company here. And even when it comes to just the overall business model and the growth that they're getting here, you're talking about a business that is held up. So where is that worst case scenario?
Well, there's a lot of concern that spending on the cloud would continue to slow, and it has been slowing for a couple of quarters. But let's keep in mind that sales growth in AWS is still at double-digit growth. And in fact, with the results from Microsoft and Alphabet earlier this week, people were thinking, wait a minute, maybe we've gotten a little too bearish on expecting this slowdown to come in at AWS. Maybe we can mentally ratchet it higher. And Amazon has delivered here, over-delivered on the cloud side, which is kind of what Alphabet and Microsoft set us up for. And AWS is important, guys, because it makes up the majority of Amazon's operating income.
Absolutely, absolutely. Let's get to Mondelez, a different type of earnings release here, certainly a different type of company, but this company also beating, it looks like, on the top and bottom line. First quarter net revenue, $9.17 billion versus an estimate of $8.47 billion. First quarter adjusted EPS, 89 cents. That's 9 cents better than the street was expecting. And you also have the operating margin coming in above estimate, 17.2%, 16.5 was the estimate. So definitely a beat there, and you're seeing Mondelez trade a little bit higher. Let's get to Pinterest, also out with their results. So a read certainly on the advertising and social space. They are reporting a first quarter adjusted EPS of 8 cents. The estimate was for a 0.3 cent loss. I want to check on that number. So it does look like a little bit of a beat. First quarter revenue, $602.6 million. That definitely is a beat. The estimate was for $592.8 million. The stock, though, is trending lower here, down more than 3%. And first quarter revenue, that is, though, a beat here, but not enough to impress investors, Maddie. That stock down about 8% in the aftermarket.
Yeah, I just want to go back to Amazon really quickly, though, because these earnings beats across the board here are also showing a beat at physical store sales heading through to online. The North American net sales and subscription services, all beats there. So along with Mondelez, that's kind of two boons for consumer spending that we're seeing, Romaine.
So what's the next step here when we talk about sort of the guidance going forward and whether this sustains itself deeper into the year? Does this become one about the business spending and particularly how it ties to AWS, or is it more about consumer spending?
Feels like it's got to be both, right?
I agree. I think what's interesting is that we were so looking forward to this week. These are the names that really move the market. We've seen it, right? We've talked about the, over performance, if you will, or the, over, play that in terms of the overall trade here, if you will. I'm not getting my words out here. But my point is these are big companies. They move the markets. They do a lot for all of us at work, at play, you name it. And they are really performing here. And they're giving some upbeat guidance. And that's a strong indicator.
I'm really curious, and this is something that comes up in Bloomberg's Top Live blog here, where we track all the earnings, on what Amazon or how Amazon is going to frame AI, because it's been such a big theme for these big tech companies. You can't not talk about it. How does that play into its various initiatives, whether it's the web services, the cloud business, or whether it's on the retail side, certainly where you already kind of see it in action with all the recommendations that they're constantly pushing in your face?
Well, they did definitely talk about the importance of data when it comes to advertising on the press release, but we'll look for some more when it comes to AI, which it seems to be we've all got to talk about AI, and certainly these players. All right, guys, a lot of earnings after the closing bell, and we're seeing stocks move, Amazon in a big way, and so we'll certainly track that into the Friday trade. All right, that's a wrap. Radio, TV, YouTube, and Bloomberg Originals Beyond the Bell. We'll see you again, same time, same place tomorrow.